Welcome back to the Dividend Diplomats YouTube channel. You've got Bert and Lanny, your boys here, your favorite dividend investors on the YouTube network, guys. Thank you for being on this channel, guys. We can't wait to dive in because I've got a little bit of a dilemma here because certain ETF that I've been buying every week has just shot up too much in price, and I might pull back a little bit on my purchases.
All right, it's going to be exciting. It's going to be a very discussion based. I'm pumped up to hear what Lanny's thinking and why he might be making this change going in at the end of 2022, going into 2023. If you haven't already, everybody, smash that subscribe button. Give this video a thumbs up. As you recall, I'm still sipping on this from our last video, guys. We're trying to knock out some of these. I still got this natty daddy going from the last video that we watched. If you recall, the week before, we said if we get to 300 likes, I'll drink that natty daddy while we're recording our next round of videos. You got us there. You freaking got us there. And that's what it's about. So here we go. Cheers. Lanny, kick us off. Tell us a little bit about your dilemma while I sip on this golden goodness here.
Golden goodness, guys. So since July of 2020, we all know that my wife and I, we've been buying Vanguard's high dividend yield ETF, ticker symbol is VYM, weekly. And then the stock market in and of itself was going down, and VYM was also going down this year, thanks to everything going on, record inflation, Fed increasing interest rates, and the market was reacting wildly to that, especially with the fears of recession looming. Now, what has happened is that VYM is now up over $113 per share. And as of the close on December 2nd, yeah.
I'm just laughing. I'm just hearing you say it. I'm just laughing. It's ridiculous.
I'm frustrated here, as you guys can tell. So now they're up year to date. So while the market's down 15%, VYM's up about a quarter to 0.5%. Nothing big, but they're up. They are up. Now, when they were having that pullback, we were doing 3 shares each per week between my wife and I. That's 6 shares. So now that the price has steadily gone up, a few dollars every single week, it's getting a little bit more expensive without knowing what the Q4 dividend is going to look like. I know Bert and I just started chatting a little bit ago that, unless they have like some awesome Q4 dividend, I'm going to pull back, guys. I'm pulling back, not 100% out of it, not 50% out. And I don't mean selling. I just mean my frequent weekly purchases. I'm reducing that. I'm going down 1 less share. So we're each purchasing 2 shares per week.
And look, this is the beauty of these investing strategies. You always have to be evaluating these decisions. You always have to be keeping an eye on it. You don't just want to go into autopilot and just never think about what's going on. Again, the market changes. What's going on at the end of 2022 certainly wasn't what's happening at the beginning of the year. Certainly not last year or the year before when you started this strategy. So I think, Laney, at this point, after seeing how much the price has jumped up, it's obviously worth reconsidering what the heck to do with VYM. And yeah, if you want to drop it down 1 share, fantastic. We know you, Lanny. You're not just cutting out 1 share and like, yeah, I'm just going to keep this in a high yield savings account. You're going to put this to work somewhere else. That's what's going to be so exciting here as we talk about this, is to see, what are you thinking? Where are you looking to put the money? If you're not investing in VYM, what are you going to do with this $200 plus every single Monday?
Exactly. And, my thought process is VYM, using the forward 12-month current dividend would be about $3.22 or 2.85% yield right now. So if I'm going to jump into some individual dividend stocks, it's got to be higher than that because I'm taking on a little bit more risk because I'm not as diversified. So for me, the benchmark is you got to be probably 10% higher than that risk because I'm taking on, or higher than that yield because I'm taking on a little bit more risk.
And I think that's fair because everybody, remember, VYM already has a strong yield. This isn't as if you're going from nothing into you're just chasing yield. The only reason you're considering yield here is because you have a benchmark that you have to clear getting over the dividend yield. That's why I think this is so important and this is so clutch. So let's hear that. So obviously VYM's yielding around 3%. You're going to have a few extra companies here that are above 3%. So Lanny, let's talk about that first stock here on there.
Well, great question. So I'm going to talk about a few stocks that I'm watching to replace, 1 share for my wife and 1 share for me. Again, in total, we're looking at about $220 to $230 per week that we need to, now push into some other investments. Obviously, if VYM comes down, we'll reconsider about adding more back. But as of right now, for sure in my wife's account, we're going to add at least 1 share per week into Medtronic, the Dividend Aristocrat, soon to be Dividend King in a few years. Ticker symbol is MDT. That's going to be that's happening. That happened, that started last week, and we're going to continue it. here, December 5th, December 12th, unless that share price all of a sudden also comes back up. But
I love it.
Medtronic.
Absolutely love it, because what's been nice about Medtronic as that price has come down is they're a dividend aristocrat, everybody. They're almost a dividend king. They've increased that dividend for 44 plus years. They are less than a decade away from becoming a dividend king, a company that's increased its dividend for 50 plus years. That's an exclusive class. So you always have to look at companies like this when they pop up on special. And as you run Medtronic through the screener quickly, we can just rip off some of the metrics here so you can get a sense of why Lanny's considering them. PE ratio at the current price is 14.7. Payout ratio is perfect at 50%. Their 5-year dividend growth rate is 8%. Increase that dividend for 44 years, and their yield is 3.42%. So that's the big check right there. Lanny said he wants 10% plus yield greater than VYM. You got it right there with Medtronic, that first company you're considering.
Exactly. So boom, there you have it. Again, down 25%, over 100 bill market cap by, based on the stock price and number of shares outstanding. Feel really good about that, which, again, maybe it's not a full $110 redeployment. It's only at 80. So there's still a little bit of room there for my wife's account, but that's okay. I'm not going to pull hairs there. If I find another stock to, squeeze in there with that, I will. Which, hey, this segues into the second dividend stock.
Oh, excellent segue, Mr. Lanny.
So I've been looking at getting to 200 shares on a very beaten down, out of flavor tech stock of Intel. Ticker symbol is INTC. Based on the last drip on December 1st, I'm actually now at 188. And you'll see if I ended up buying shares in our purchase video that's coming out on Thursday. So I'm at 188 shares. I'm so close. No matter what, I'm probably getting 2 to 3 shares on a drip quarterly. So no matter what, this time next year, I'll more than likely be there between dividend growth and reinvestment. So I'm looking at Intel. Ticker symbol is INTC, $29.41. So it's only $29. So yeah, could I buy 2 shares, 3 shares? Absolutely.
Yeah.
To replace $110 worth of what VYM I was doing.
Easily. Absolutely easily. So we all know what's going on with Intel. It's the same reason why Qualcomm was on my watch list. In the last video we're talking about, we've added to Texas Insurance. We talked about this. Intel's doing a lot to break the supply chain issues they've had in the past, but it's going to take some time, everybody. It's going to take time to build. You don't just pop up a $20 billion plant out of nowhere. It's going to take time to build, get the supply chain fully set up, but they're working towards it. The sector's got to change. That's why there are some great buying opportunities here so far. Let's see how the metrics stack up. Lanny, you said you want 10% premium on Intel from a dividend yield standpoint. Let's check. I don't think that's going to be a difficult one to pass. Their price to earnings ratio is 15.6. Their payout ratio is 77.6%. 5-year dividend growth rate, 6.29%. They've increased that dividend for 7 years. And their yield, you tell us about that yield, Lanny. I've talked enough about the metrics. Tell us, what is their yield?
Again, to get the 10% kick, from the VYM, you need to be a little bit over 3.5, or 3.1 to 3.25. So here with Intel, you're actually at almost 5%, yield. You're at 4.96%. So they're actually almost 2x what VYM is. Again, you're taking on a lot of future risk because of what Intel is going through right now. So they're paying you really to wait right now for as they get through some of this production, supply chain issues as well. So yeah, 4.96%. Again, the stock is down 45% this year alone, and they're still 120 bill by market cap company.
All right, let's see number 3 here. You've gone through 2. Again, Medtronic, Intel. Lanny, what is that third stock here earning the title and getting on your watch list here to replace VYM?
Sure. Now, first there were some couple special mentions. UPS, United Parcel Services, I was loving them under 185. And then what happened to finish off this week with UPS stock is that they actually finished off right around 189, 190. So, again, as soon as I really like a stock, as soon as I buy maybe a share or two, all of a sudden they say, thanks, Lanny, we're going to just take off now about $10.
Thanks for your money.
Yeah. So UPS is a special mention stock. Realty Income, ticker symbol O, is a special mention stock. I say special mention because, especially for Realty Income, because they're in my Roth, and it's like, do I want to have them in my Roth and in my taxable account? I'm not sure.
Fair. I get it. That's fair.
So the third stock is a REIT, though, and we're talking about a stock that I evaluated back when they're in the 120s, low 130s. And you guys remember Store Capital is going to get acquired, which currently yields over 5%. So Crown Castle is on this watch list
Ooh.
here. Ticker symbol CCI. I'm considering
I dig it.
CCI.
I dig
So
it.
now the thing is, they're trading at $140 a share. So it's like, okay, for my wife's account, she has 30 extra dollars. It's like, okay, am I able to leverage that, at all occasionally to grab a share of CCI? So something worth mention there.
Sure. It's
Uh,
absolutely. I mean, it's definitely worth hitting out there, especially once we start going through the metrics, once we start seeing it. It's obvious why CCI has earned that spot and why your wife may continue nibbling and may keep working through it. Well, let's talk through it. Because as a read, everybody, it's not price to earnings ratio we look at, it's the price per AFFO as we're going through this. When you look at the price, their current price is 140.17. Their AFFO is 736. Price to FFO is 19.04. So below the market when it comes to that. Annual dividend, $6.26. That payout ratio is 85%. 5-year dividend growth rate, 9.14%. They've increased that dividend for 7+ years. And Lanny, tell us, do they meet your yield premium hurdle that you're looking for here?
You know what, brother? They're at 4.47%. As you saw in Bert's 3 dividend stocks he's buying this December. Realty Income's at about 4.74. So Realty Income does offer you a little bit more yield, but CCI gives you a little bit more growth. So again, great company. All the telecoms really need them. So they are a really big lifeline here domestically to the communications industry. Obviously, think of Verizon, T-Mobile, AT&T, some big contracts that these providers have with Crown Castle from the tower and real estate standpoint. So again, a very cool stock, down 30%, 60 bill by market cap. Again, another stock I'm considering as a replacement somehow.
All right. I love it. So Lanny's 3 to replace, BIM 1 share, Medtronic, Intel, CCI. Lanny, before we go, is there any specific order you're looking to do this, or is it just going to be kind of like just rapid fire, just kind of get all 3 of them in there?
It's going to be not to say a mixed bag, obviously, and everybody who's buying VYM or SCHD or VO, keep doing it. Don't time the market. I'm not trying to time the market. I'm just really pulling back based on the surge in price recently, but keep doing what you guys are doing out there. Because you're investing. Doesn't get any better than that. Medtronic is a done deal. Like, that's a done deal. I just love the metrics.
It's like that Vince Carter gift that just is over.
It's over.
Over.
Intel, might grab it again. I think you and I were talking a few more shares under 30 possibly. See if I can maybe squeeze that in, get under, get to the 200 shares by just that. And then we'll evaluate. Again, Crown Castle, UPS, Realty Income, all up for consideration. There's other dividend stocks that are out there as well. Trying to stick to ones that I own, but Crown Castle is one that I don't. But thinking ahead of when I don't have Store Capital. So
boom. So let us know, everybody. What do you think? What do you think of Lanny's rankings? What are you doing? If you were buying VYM like Lanny, are you stopping? What are you doing as the price continues to increase? If you haven't already, subscribe to the channel. Give this video a big old-fashioned thumbs up. Help us get to 20,000 subscribers here on the channel. Let's go, everybody. Come on. Let's do it.
Guys, we appreciate the support. Love the comments. Let's keep it going. Keep investing. Keep the noise down and keep your focus on.
And the natty daddies up. That's the most important thing.
Keep those flowing, guys. And if you haven't, check out the swag store. I've got the crew neck on right now from the DD. They're either with us or you're against us. That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.